Information shared on the following program is for general information purposes only. It does not constitute legal, tax, investment, or other advice, nor is it intended to recommend any particular investments, products, or financial instruments. Always seek advice from your financial advisor, attorney, or accountant with regard to investment, legal, or tax questions.
Welcome to the only show in the country dedicated to helping savers worry less about money, the Worry-Free Retirement, with your host, retirement specialist, and six-time author and fiduciary, Tony Walker.
Over these past 40 years in working in the financial trenches, the one thing that I've learned is this. When it comes to being successful with money, first, in order to sleep at night and worrying less about your money, you have to know thyself, which we talked about in great detail last week in discussing something I created years ago called the 3 personalities of money, a theory I've used in my practice to help savers know who they are and which products to utilize in retirement that are more suited to their financial personality. The second key to a successful retirement is making sure you have your retirement plan in writing so that you and your advisor, assuming you have one, can follow along together and remain on the same page not just when you retire, but all the way through retirement. Those are the 2 major keys to a worry-free retirement, knowing how you are wired for money and risk, and secondly, having that written game plan so that someone can help you monitor things throughout retirement, which is why today I'm going to focus on my most recent book, The Worry-Free Retirement Process, and how this book will allow savers to see not only the philosophy behind the worry-free retirement, but just as important, how we at Tony Walker Financial are so unique to the financial world in guiding you through this process. So, let's get started. Well, welcome, folks, to the Worry-Free Retirement. And yes, I am that little man in the sweater vest, the author and creator of the Worry-Free Retirement and full-time fiduciary, Tony Walker. And before we take a deep dive into my latest book and how it can help you in your journey of being worry-free in retirement, let me introduce 2 young lads who faithfully take this journey each week with me in producing this show, America's favorite financial sidekick, Mr. Aaron Orander, along with Louisville, Kentucky's most laid-back graphics artist, Mr. Derek Hudson. So, how has this book, The Worry-Free Retirement Process, not to be confused with my first book written some 20 years ago called The Worry-Free Retirement, how has this book been instrumental in assisting savers with their plans for retirement? Well, first, it assumes that the majority of people are definitely savers, those people who are more concerned with the return of their money as opposed to the return on it. Second, it lays out which financial products and strategies fit the financial personality of those folks we work with, which are savers. We don't work with investors and speculators, and there's a reason for that, so you're going to find out more about that today. So buckle up, because if you are that saver who is wanting to create a safe and simple game plan that you can rely on in retirement, I'm going to show you how we at Tony Walker Financial can literally help you just like we've helped thousands of other savers. So stay tuned. I'm Tony Walker. We'll be right back. Our client spotlight today shines brightly on Ron and Diana Foster, and welcome to the studios here at Worry-Free Productions. Thank you for joining us.
Thank you, Tony.
Tell us a little bit about the process you went through in finding an advisor and the number of years. Actually, you said you've kind of been considering this.
We found you on the television, watched it a couple times, and we found ourselves kind of learning as we go.
What was it about Tony Walker Financial that finally put the decision in your hands to say, let's do this?
Who we talked to before wasn't really a good fit. Coming here, this is our home.
Yeah. Gave us the tools and things to help us understand the process and become comfortable with this choice. And Ron said it best, it was a good fit because we felt like our investment money, our hard-earned dollar, could be put into different buckets that were more secure for us in the future.
Would you describe, if you don't mind, I'm very proud of the staff here, as you know, the feelings you've had in terms of working with the staff and the ease of the staff? Any comments about that so far?
From the time we walked in the door, everyone here, it was an easy process for us to come in and get to know everybody. And when we left, we talked about it. It was an easy choice to make. We were still getting the tools necessary to understand the process, and that was sent home with us as well. So when we decided this is a good fit, Ron said, this is where I feel comfortable in making sure my money for the future is secure.
Well, good. Well, we're glad to have you on board and look forward, hopefully, to many years of serving your retirement needs. So thank you, Fosters.
Thank you very much, Tony.
You're welcome.
Looking for an advisor you can trust? Schedule your free phone call with Tony at TonyWalkerFinancial.com or call 1-877-499-9255.
Interesting, as we record this show in December of 2024, how many people have retired early as evidenced by this particular article. But now what's interesting about this article, and we've seen this too, more and more people are retiring sooner than they planned on retiring for various reasons. But in this case, it says that only 1 in 5 that retired earlier truly felt financially like they were able to do so, which, if I'm doing my math right, about 80% of people then feel like they don't have enough money to retire, but they went on and retired anyway, which is scary stuff unless you have a game plan. In addition to that, we got all this potential risk out there, and with the market flying high, many people, in my opinion, who are savers, who are retired or nearing retirement, still have way too much risk, or they're trying to time the market and figure out when to jump in, when to jump out. Again, this is not a good thing for savers who are trying to follow a game plan. And to talk more about this issue of timing the market and whether you get in or whether you go out, I want to turn it over now to a fellow fiduciary, Wes Walker, to explain more about this.
So in talking about this subject, in timing the market, what people try to do is they'll remain in cash for a given period of time, and then they'll jump in to marketable securities like stocks or bonds when they think that the environment is good to make those decisions. The opposite is true as well. They might be holding the stocks and bonds and jump to cash when they think that the market's about to crash. Although this strategy pays off for some, it does not pay off for all and has the inherent risk that simply the person is wrong. What we're able to see from the Schwab data that's given from this study is that those who stayed fully invested in bear markets performed much better than their counterparts who tried to time the market at different stages of the game. It's important to remember that there are investment professionals who are paid millions of dollars on Wall Street, and they don't even get this right most of the time. So to try and do it as a retail investor without insider knowledge or knowledge of securities generally is definitely a fool's errand. If possible, always try to stay within the bounds of your risk tolerance and stay invested in the market until it makes sense to maybe get risk off the table when talking with a fiduciary.
All right, now back to this book, The WorryFree Retirement, which again is available for a free download if you want to download the audiobook at TonyWalkerFinancial.com. Really good book. But basically on page 60, let's take a look at this, Derek. We can put up this graphic. This is a cool graphic. Basically, to keep this real simple, there's really 2 halves to investing. If you'll notice on the left side, if you're looking for safety, these are the products you would want to select. Fixed interest and fixed indexed annuities, CDs, money markets, and basically cash. Those are very, very safe investments, but usually don't provide high returns. So some people feel like, well, gosh, I want to try to get some money on, some growth on my money. Well, that means you're going to have to go over to the other side, which is things that contain risk. Things like bonds and mutual funds and ETFs, variable annuities, and of course, stocks. Now, way over here, you might put gold and Bitcoin. Those are a little more speculative. But basically, this is the continuum of money. The farther you go on the left side for safety, the more potential growth, but also you may not get returns, as we've seen some fixed indexed annuities have done rather poorly, in my opinion, during this tumultuous upward and downward market. But again, at least the principle's safe. You come over on this side, the more risk you're willing to take, the more possibility for growth. So what do we do at Tony Walker Financial? How do we use these products to help our saver clients determine if and how much risk they wish to take? Well, when I come back, I'm going to go over something that's really interesting. We're going to simply talk about this side of the ledger and with our Charles Schwab platform, how we can show a variety of different patterns and risks that you might wish to take as you take this journey into retirement and utilize this money and use and enjoy this money before it's too late. Stay tuned. I'll be right back. Have you recently retired, been laid off, or offered a pension buyout? Has the company you work for moved, been acquired, or closed its doors forever? And finally, do you have a 401k with a previous employer you'd like to move to safer territory? Then take advantage of this opportunity to move your 401k or lump sum pension to Tony Walker Financial. Let's meet in person to discuss your retirement options. Log on now to TonyWalkerFinancial.com to schedule your free, no obligation appointment. Let us help you today. You know, Heather, I think back to 2006. Is that when you started? Okay, I think I hired you for like tax planning. Was that your title then? Something like that.
It was financial research coordinator, I think. It took me a minute to think of that.
Well, I've been in the business so long up until then, and I understood the need for tax planning, but we really didn't have any strategic plans. We didn't have a department. Speak to, as we fast forward now to 2024, our tax planning department and the role they play behind the scenes. I don't think people realize how much work they do, but the importance of the role they play behind the scenes at no additional charge. We don't charge for these services, but for our clients of Tony Walker Financial.
Right. I think you originally hired me, like you said, for essentially some tax planning. I had a background in accounting. Right now, our tax planning department consists of TJ Reagan and Leanne Tinsley. And there's so many tax issues in retirement. I think people are just like, oh, you pay your taxes. But it does change with retirement and between required minimum distributions, possible Roth conversions, legacy planning, estate planning. There are so many issues that are involved in your retirement as far as taxes go. And to have two full-time people on staff that can answer those questions, and they work, as you mentioned, they work behind the scenes. There's a lot of tax planning inside the plans that we present to potential clients. They may not see that initially, but it's in there. And because we're trying to be proactive as much as we can on tax issues that may come their way.
And then also, I think what a lot of people don't realize, I had some clients, prospective clients yesterday, they're moving forward. And the lady, she was so funny. She said, so make sure I understand this. Really what you're going to be doing is taking over the paycheck we were getting. You're taking all the taxes out and all that. So speak to our tax planning department too, how we hone in. Not only are we just going to send them money so they can continue to enjoy retirement, we're also doing all the calculations, the withholdings, all that. How does that process work?
Yes, so that's one of the things we do even look at when we're preparing a plan. Especially TJ, he does look at what we're projecting income to be. And then based on current tax brackets, of course, we can try to guess at future, but good luck. But then we look at those tax brackets that they will be currently in given projected income. And also that will factor in if we're looking at Roth conversions, trying to stay within their current tax bracket and things of that nature. So it's a great service to have, and not every advisor has that ability to do that.
Looking for an advisor you can trust? Schedule your free phone call with Tony at TonyWalkerFinancial.com or call 1-877-499-9255.
And now it's time for Tony in the Trenches.
Our Tony in the Trenches comes to us from Russ in Cox's Creek, Kentucky. Tony, I just received my game plan from your offices and must say I am truly impressed. As someone who understands the value of time, I've got to ask, how long did it take your office to put this plan together?
Welcome back to the WorryFree Retirement. And before we answer this TNT, this is kind of interesting. On page 48 and 49 of the WorryFree Retirement Process book, which we're featuring today, that I wrote recently, this gets into the Charles Schwab bucket specifically. So we'll come into that in just a second. But let's first answer this TNT. So this is a great question. Someone has gone through our process, especially those who have worked with other advisors or so-called planners. and they see the amount of detail we have, and this is their reaction when they see our game plan. So what I thought I would do is just take us through a timeline. Now, it varies depending on the complexity of the case I'm working with, but we're going to kind of go through a timeline of how long it generally takes us from start to finish, from the time I meet with someone until the time that they decide to do business. So let's take a look at this full screen, Aaron. Okay, first of all, there's the first initial meeting with me. In almost all cases on the first appointment, if somebody responds to a request to meet, they've seen the show, they've seen an ad, they're going to meet with me in person. And generally those meetings last 30 minutes. So there's 30 minutes right there. Then I'll take that information, if I think that can help them, to put into our game plan, and I do a review of their situation and lay out the game plan first before turning that over to the income planning department. Let's put another 30 minutes up there, Aaron. So now we've got an hour into this thing. Then we meet with the income planning department, and I have to explain the plan to them because they in turn are going to put it in our proprietary software. Well, let's put another 20 minutes on there. So now we got an hour and 20 minutes into this. This again before we've actually done the plan. So then Lisa Allerkamp, who's in charge of our income planning department, will delegate all of the different things that go into the plan. And generally, on average, I've asked Lisa, I said, how long does it take you to do a plan? And she said if it's fairly complex, it will take us 3 to 4 hours just to put the plan together. So let's say 3 hours. So now what is that, 4 hours and 20 minutes or whatever? And again, folks, we haven't even presented the plan yet. Keep in mind, if you qualify for this service, this is absolutely free and there's no obligation. So then I meet with them a second time. I usually spend 30 to 45 minutes with them going over the plan. So we'll add that to the mix there, whatever we're up to now, Aaron. Then they usually take that with them because we want them to study it, make sure they understand it. In many cases, they'll follow back up with our office. Usually they'll talk to Heather Hughes, who's kind of next in the chain of command in terms of fiduciaries that I like to talk about and also talk about the plan. They might spend 20 to 30 minutes with Heather, and then they say, all right, we're ready to move forward. So what do we got there? 5, 6, 7 hours we've got into the plan before we've even done the overall plan. So what happens next? We move all the money over. That may take our time an hour to 2 hours to get everything moved over. Again, we're doing all this with no upfront out-of-pocket costs, folks. And then here's the beauty. They become a client. All of the monies arrive at Tony Walker Financial, and we put together this wonderful, what we call binder delivery to explain the reaction. In fact, it was Trey Jurgens who actually met this fellow that got this reaction of the binder delivery process. I'm going to turn it over to my favorite son-in-law, Trey, to describe how this process works.
Yeah, so the binder delivery appointment is kind of the final appointment in our process. It's really the culmination of all of our planning. It's when all the accounts are established, funded, all the annuity contracts are ready to be delivered, and it's really kind of ties the bow around the whole thing. So it's not uncommon to hear a wow in those appointments. This client actually really understood the time and the attention to detail that went into it. So that delivery appointment, like I said, is kind of the culmination. And for most clients, it's the time that their finances have probably felt the most organized in their life.
Okay, we're back to talking about the Worry-Free Retirement Process book. And in the time remaining, I want to kind of go over this. This is pretty cool. That's the split IRA, okay? And we're talking about that particular bucket, the Charles Schwab bucket. And what is this exactly? How does this work? So let's kind of go through the three different, these are the major, we've have different strategies. These are 3 of our most popular strategies. In fact, show this full screen here. And here's a statement of somebody who actually has all 3 strategies. And you can tell that there's different things that will happen within these strategies, depending on what? Depending on how much risk they wish to take with their money. So not everybody will do this, but this might be something you may want to consider doing. So forget the annuities a minute. We've got the annuities locked in place for safety, security, mailbox money. They're already locked and loaded. They're not going to lose any money, okay? Those are the annuities, but they're not as flexible, the annuities. They probably are not going to earn large rates of return. That's not what they're for. What the Schwab bucket is for flexibility, the ability to get money out anytime you want without penalty, and we do all of this in-house. We even do all the trading, folks. Very few people offer these kind of services, and currently these fees are some of the lowest in the industry. In fact, if you want to see more about our fees, you can download Form ADV Part 2 at TonyWalkerFinancial.com, and it'll disclose exactly what our fees are for the Charles Schwab platform. But let's look at this a minute. So let's say somebody says, well, Tony, yeah, I don't want to do anything with those annuities yet. I want those for safekeeping, but I need some income now. How's that going to work? Well, if you'll notice, we would take money first out of the conservative bucket. The conservative bucket would be short-term bonds, maybe a little bit of equities, not much. Again, we manage all this. It's meant to not take a lot of risk because this is the money you probably are going to need now. Folks, if you're going to be taking out money pretty soon, you don't want to have all that money at risk because if the market tanks, well, it's going to be difficult to take money out at a loss, or at least you may not want to do that. So the conservative bucket is drawn out first. Now, what happens is, in theory, again, this can be a little risky, but the moderate bucket then has been growing over time. You see what's happening here? Because we use the conservative money first. As the moderate money goes up, actually, this illustration doesn't show this. What we would do is we'd move more of the moderate back into conservative. Notice the growth has grown. Again, in theory, it could go down, but in theory, the growth has grown. We would move some of that down into moderate. So what we're doing internally, what we're managing, folks, is a process. We're not trying to time the market. We're not trying to throw all your money at risk. In this example, this person had 3 different strategies with Tony Walker Financial within the Charles Schwab, and that's what we're managing, is the process of overseeing the money, getting it to you at the least amount of cost, and then also with our tax planning department, we're managing all the tax ramifications of this at no additional charge. Most people don't do this. In fact, the other day, someone came to me and they said, Tony, I got a broker. He's a nice fella. Well, we're not doing any retirement planning. He won't do any tax planning. I need a plan. And maybe that's you right now. That's fine. You've been growing your money and you've been accumulating money, but now you might be at the point where you want to spend and enjoy some of this money without taking all this darn risk. Well, that's you. We need to talk. And we've made this so easy to do. In fact, we call it the free 10-minute fiduciary phone call. So to take advantage of this free service, just log on to TonyWalkerFinancial.com. Go and click that little Let's Get Started button or call us anytime, 24/7. That's right. We've got operators standing by, even if it's at nights and a weekend. Just tell them you want to set up that free phone call by calling 877-499-9255. We'll be right back.
Hi, this is Craig at Tony Walker Financial. I'm the rollover specialist here at the office, and here's a common question that we receive. One of the common questions we get during rollover calls is this taxable? Because there's a movement of money involved, people want to make sure that they're not paying extra taxes on their life savings, especially when they hear that they'll be receiving a 1099 to file with their taxes next year. But you can rest assured when moving money from a pre-tax account, like a 401k, to an IRA, or if you're rolling over your Roth or after-tax funds to a similar account with Tony Walker Financial, you will not incur tax penalties for that transaction. Rolling over your funds can be a little bit complicated, and it does involve some questions you may not have encountered before. That's why we are here to help. If you have questions, just let us know. You can email me anytime, Craig at TonyWalkerFinancial.com.
Looking to roll over your 401k? Then log on to TonyWalkerFinancial.com and learn just how easy it is to roll over and safeguard your 401k. Do it today. Our theme these past 2 weeks focuses on the foundational premise that all of us are hardwired differently when it comes to taking risk, especially for those in retirement who are relying on their money to last as long as they do. Based on my observations in working with thousands of savers and utilizing the expertise of psychologists to test my theory of something I call the 3 personalities of money, I am more convinced than ever before that the key to a worry-free retirement is first knowing thyself, and more importantly, once you figure out who you are and how you are hardwired for risk, or the lack thereof, stay in your financial lane when it comes to the investments you select. Problem is, with today's modern technology and being in the information age, we are exposed in real time to a stock market and other supposedly safe investments that, in my opinion, oftentimes fall into the category of speculation. These risky products that certainly can come with huge returns can lure savers out of their lane of safety and security, and instead have them driving at speeds they need not exceed by putting their money and their retirement at risk. So why do we humans do this? Why would we, at some point after finding our personal lane of safety and security, decide that it is best to leave our lane and enter a lane full of risk and uncertainty? Well, believe it or not, those of us who claim to be followers of Jesus Christ and born again into this good news of the grace and mercy that comes from knowing God through saving faith can easily veer off back into the lane of trying to earn our way back into heaven by following after a law that we know from our previous lives was a failure. Check it out in James 1:24, where it says that after observing himself, this man goes away and immediately forgets what he looks like. Sounds like the savers I meet who admit that they like to keep things safe and simple, but over time are lured back into taking risks because they are told by others that's the only way to be worry-free in retirement, is by investing in things they don't understand. James 1:25 also reminds us that the key to joy and contentment in the Lord is only by more closely following God through an understanding of His perfect law of freedom offered by Christ. But guess what? Soon we drift right back into the lane of trying to follow the law. It's this idea of leaving something behind that was not good for you, finding something that is, and then turning to it. But then, after a time, you head right back into the thing that got you in trouble in the first place. This condition is so nasty to consider that the Bible describes it as a dog returning to his own vomit or a pig coming back to wallow in his own slop. 2 Peter 2:22 says it would have been better to never know the truth of this saving faith found in Christ if all we're going to do is return back to the wicked way of life. So what does this prove? Well, as 2 Peter 3:1 reminds us, it proves that we humans need to be reminded to stay in our lane. So, assuming your faith is drifting out of the lane of peace and contentment in knowing Christ, my advice, stay in your lane, Christian. Don't be fooled into thinking that there is more you can do to inherit the kingdom of God. Christ has done all we need to do to make your driving life light and easy if you'll but turn the wheel over to Him. And that's a safe driving tip you and I can take to the bank. Amen? Well, speaking of staying in your lane and being at peace with what you've got and how you're going to use it in retirement, I've got a question for you. You savers out there who are wondering if now is the time to take risk with your money, why? Why at this stage of the game would you at your stage in life decide to take all this risk when more than likely you don't have to? I'll tell you why you're willing to get out of your lane and take risks, because that's what the financial world keeps telling you to do. And secondly, because you don't have a written game plan to prove that you can make it in retirement without losing any sleep, something we call
sleep insurance.
So if that's you, if you're sitting there saying, yeah, Tony, I feel like I'm taking all this risk, I don't have a game plan, I don't have anybody I can trust, we have made this so easy to find out more about Tony Walker Financial. We call it the free 10-minute fiduciary phone call. And here's how easy it is for you and I to talk by phone. Just log on to TonyWalkerFinancial.com. You're going to click on that little Let's Get Started button, and we'll arrange this free phone call. Now, after you and I speak by phone, if it merits, if I think I can help, you and I are going to meet in person. That's right, the owner of the company with more than 40 years of experience in the field of finance, meet in person to discuss your situation and to get this free written game plan. All you got to do is log on again to TonyWalkerFinancial.com or call 877-499-9255. Well, we hope you've enjoyed today's program. We look forward to seeing you next week on the Worry-Free Retirement. But between now and then, if all else fails, you be worry-free and make it a good one.